Austin's apartment market appeared to be cooling down going into 2013, but even as supply started picking up notably, Austin ended up regaining some momentum over the course of the past year. Welcome to Apartment Market Dynamics from NPF Research. I'm Jay Parsons with your Austin update. Austin has been one of the trendiest markets among investors and developers nationally, and that status led to a very quick ramp up in apartment construction coming out of the recession for the Texas state capital. Take a look at apartment construction by quarter over the past few years, and you can see that we are back around the peak levels set 5 years ago, about 14,000 units underway at the end of 2013, and of those, just under 13,000 are scheduled to complete in 2014. That's on top of the 5,500 units that completed in 2013. Now, to put those numbers in perspective, Austin's apartment market grew by 2.9% in 2013. That was third largest in the country. And in 2014, Austin's apartment base will expand even more rapidly, another 6.7%. And take a look at these rankings here, and you see that's tops in the country, a hair ahead of Raleigh-Durham, and well ahead of everywhere else. You see Charlotte a distant third at 4.9%, followed even further behind by Orlando, Nashville, and Denver. And given all those numbers, it was widely expected that Austin's apartment market would start to cool down in 2013. Not drop off, but certainly cool down a bit. And what we started to see, though, is that instead of a cool down, we started a little bit of improved momentum on the rent growth side. Take a look at this chart showing rent growth by annual rent growth by quarter, and you can see Austin hiked up rents by 7.2% back in 2011, back when supply was minimal. That number cooled to 3.9% in 2012, and the expectation was that number would continue to cool moderately going into 2013, but instead, rent growth picked back up to 4.8% in 2013, and that put Austin in the top 10 nationally. And you can see what is really driving those numbers is the middle tier and lower tier of the market. Rent growth of 6 to 8% in apartments from the 1980s, 1970s, and prior to 1970. And of course, the numbers in the top end are actually still impressive, as you can see there. Rents up around 4% in the units from the 90s and the 2000s, which is certainly strong given that those are the units that are competing with all of these new properties that are underway. And occupancy rates in Austin are still in strong shape too, coming in at 95.8% as of year-end 2013. That was a 6-year high thanks to growth of 50 basis points in 2013. Very impressive performance reflective of the strong economy and demographics that are pretty ideal for the apartment sector. And occupancy rates are strong across the board right now, which puts the market in a position of strength heading into 2014 when the supply numbers get significantly higher. So what does all this mean for 2014? Well, Austin's apartment market certainly has impressed of late, but even if it puts up incredibly robust apartment demand numbers in 2014, it almost certainly won't be nearly enough to keep pace with the 13,000 units that will be completing over the next year. So we view 2014 as the low point in the cycle for Austin's apartment market, with the caveat that the low point for Austin certainly won't be all that low. Our expectation is that occupancy cools down about 200 basis points or so, and that rents climb about 2.5% in 2014. Still good numbers relative to the huge supply surge that's facing the Austin apartment market. And that wraps us up for Austin. So until next time, for Apartment Market Dynamics and NPF Research, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, NPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.